Time now for Market Movers with easy-to-follow futures and options trades from CME Group.
Welcome to Market Movers. I'm Jim Urio, and today we're talking about Fed Chair Janet Yellen and the likelihood of her staying on with her tenure at the Fed. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Okay, so she wants rates to move higher. If rates are allowed to move higher, Donald Trump has come out and said he's a low-rate guy. He likes low rates. Does that affect his decision toward the end of this year?
Oh, I think it has to, because Janet Yellen has been the queen of low rates and easy money. So if she steps off that pedestal and starts to say, well, the economy's getting better, we need to reduce our balance sheet even further, that to me tells me that rates could start to bubble up, which would make Donald Trump upset.
We heard from her today. The market thought she was going to talk more about reducing balance sheet, and she didn't. Was that on purpose, or when we hear from her in the next couple of weeks, is she going to talk about it again?
She will. Now, I think that was a practical call on her part, because if you look at the economic data points in the last 3 to maybe 4 months, they've definitely softened. So the Fed has a responsibility to pay attention to the econ data, which to me is getting a little bit weaker.
Right. So selling out or letting their balance sheet unwind
it may not be necessary to do it so
rates higher,
harshly.
And they may not want to do that. Now, before we dive into our trade discussion, I would like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to manage risk or create additional trade opportunities, not as recommendations or advice. Prices and movements will vary in the markets. Right now, we're pricing this out. The SEP 10-year's trading about 125.31. Scott.
So it's fun to be back in the ZN trade, right? I mean, we're in the midst of a pretty exciting earnings season, and you look at typically the NQ or the ES, but the ZN, as it relates to your portfolio, has some value, I believe, especially considering how exciting the market has been the last few days with respect to some of the tech earnings that are out there. So looking to maybe see some price appreciation in the ZN as we kind of pull back from maybe this earnings hoopla, which is specifically, Jim, looking at the 126 half call spread in the ZN. So it costs you about 13 ticks or a little bit over $200. It expires August 11th and has the underlying, like you mentioned, about 125.31. So you're going to make a potential 300 on this if it fills out the full call spread, with the belief that the earnings season, maybe we get a couple of, say, beats or some misses as well. And the fact that at least the excitement in the market pulls back a little bit, and seeing how sold off at least the ZN has been in the last few days, there's an opportunity at least to retrace some of that down move, I believe.
I like the value of this. We're right essentially at the lower strike, and it's a kind of a 1/3 ratio, what you risk to what you make. So I like that. And also, so you're saying the stock market pulls back a little bit and the risk off trade forces money into the 10-year. I think that that's a real possibility.
Especially if you look at value in the ZN and where it's been in the last few months.
I'm looking at it a little bit differently, too. I think that when we hear more from the Fed, they're going to talk more about letting their balance sheet unwind. And I think that could steepen out the curve and push 10-year prices lower. So I'm looking at buying the week to August 125, 124 put spread for 7 ticks. Now, that's a full point below where the market is, too. So it's a different sort of tact than you're taking. This trade currently costs 7 ticks, which is risking $109 to make $891. It goes off August 11th, just like yours.
Role reversal part two again. You
yeah.
have taken my lead in the last couple of weeks and really jumped into it. And the reason I do like this trade, or at least appreciate it, let's say, is there is a decent risk-reward potential in there, which means it's not exactly like you need it to completely fill out to, say, take a victory on this one. You can let it massage a little bit within that range as it gets closer to that range, and maybe take it off if you're happy with the profit you've got baked in.
Right, and it's a very little bit of money put down to risk. So, I mean, as long as you understand what your risk and reward is there. It might not happen, probably won't happen, but if it does, it'll be a big reward.
True, and look at the volatility in the ZN, too. If that kicks up just a little bit, suddenly this, to me, becomes a lot more valuable on your side.
Have you changed your mind on rate hikes this year? Is there one left?
I'll never change my mind. But I'm starting to get a little bit concerned with respect to the econ data and what's going on in D.C., because the lesser of those things that happen, the more risk we have that we're not going to see rates go up.
Thanks for joining us on Market Movers. I'm Jim Urio, where we're helping to make you a better trader.